Okay. Thank you to join. Let me know if anybody's here. Um, we'll start it just in a moment. Okay. So if you guys are here, let me know. Say hi or something. In particular, if you can hear me. Hopefully you can. Perfect. Thank you so much. Ciao, Seth, Star. Perfect. All right, let's dive in. I want to accomplish a couple of things. Hopefully, we can do it within 1 hour because usually these meetings go on forever. But I can stay longer later after the presentation for questions. If you have any questions or at all. So anyway, one of the goal I want to show you the different indicators that we have. Hopefully, these are tools that are useful to you guys. Mostly is also an invitation to come to our Discord because we have a Discord group. Right now, I think we are close to almost 600 people, something like that. But it's a very nice group where some people are more active, some people less active. You don't have to be active at all. But it's a good opportunity to meet other people that are kind of focused in wanting to learn more about Bitcoin. And it's not just about the power law, it's about science, using science and math and stats instead of the usual tools, like kind of hand waving tools that people use. So if you are interested in these, join our community. I can give you a link for that. And it's basically by joining the community, you're also getting access to our indicators, to these indicators that I'm showing here. And the two are one-to-one. The lowest level, it's basically symbolic. It's just like $5 a month. And we do it in that way because, there are people all over the world that have, they want to know about Bitcoin. We want to know about the power law. And at the same time, we want to keep the community tight. So if it was completely free, it will be a mess. Everybody will join, even trolls and things like that. So you have to show a little bit of dedication. So if you're interested, join us. There are 4 meetings a week we have on Mondays. We do like training. We show you the indicators. We take questions about how to use them. And the uses are different, right? You don't have to be a trader to use them because they can tell you about dips in the market. You can put alarms, alerts, using TradingView. Everything is done through TradingView. And they can tell you when a dip happens, and you can buy the dip. You can do DCA. Eventually, we will add some indicators that actually have recommendations in terms of the weight. The idea will be, as we climb up towards towards a top, probably you want to start to buy less, right? You could still put some money aside to buy the dips, or maybe to buy when we go back to the bottom. So try to understand. The entire thing is learn. It's these are tools that tell us, what is going on in a much better and deeper way than many other things. And it's almost like I use these analogies, like driving with the lights on. So even for me, I studied Bitcoin for 12 years, and I developed all this knowledge little by little. And never put it together in this way, like with indicators, etc. And right now, in 12 years experience, it feels for the first time I have a guide. I have a map. I have a GPS. It's like a GPS, right? You have GPS. Where you're going. We have a. You can compare. Before, after, what happened with previous cycles. You can go back, look at similar places where we were in the cycle. Um, there are so many things you can do with this information, and it's very comforting also because it gives me a sense of direction, right? So I am the first user of this, and basically I'm trying to share 12 years of work with you guys, and hopefully it's useful, right? And it's up to you if you find it useful, and then you want to contribute to. It's all done through Patreon. So it's, we think it's the most ethical way of doing this because basically you're supporting my work. Right now, this is my full-time work. I spend like 12 hours a day studying Bitcoin, looking at the math, going deeper and deeper, looking at liquidity. So I can share this knowledge with you instead of publishing a paper, that I'm still trying to do. Many scientists, there are people don't know that they have published several papers about Bitcoin with things that could be useful actually to Bitcoiners, but they don't share it with us, because it's over there. You have to search it, etc. People are not aware. I'm trying to communicate this information to the general public and then make it practical so people can use it. So join us if you like us. So I was telling you, just to give you a feeling, we have a meeting on Monday where we do training. We record most of this meeting. We have a channel where you can go and look at all the previous recording. But it's nice to do it live so people can participate and ask questions and interact. And then, so this is a training mostly on the indicator. So, kind of a welcome to all the new people on Mondays. On Tuesday, we have a general meeting where the entire group comes together and people can ask questions about anything, doubts, or we can talk about the market or what is going on, anything is open for discussions. Then on Thursdays, we read that book Scale that I recommend all the time about the significance of power laws in the universe. And right now I'm trying to structure it where basically I have like little mini lectures where I kind of summarize my understanding of a book, and then people can interact by they are supposed to follow along and reading the book together, but they can interact with me asking questions and we can have discussions, and some of the discussions are really cool. So that is also a nice meeting we have on Thursdays. Then on Friday I teach you how to code. So if you never coded before, or even if you are an experienced coders, we can even share together code, or even if you never done it. We had some people that never done it before, and we start from scratch. I guide you, and the code language we use, it's Pine code because it's the code where you can learn how to do charts like these. Of course, simpler versions, but also we use Python. So you can actually download data and then maybe you do your own power law. So it's all about verifying and not trusting anybody, right? So you should do at least once in your life a power law. So you say, okay, it looks, it's true. If the data seems to behave in this way, but I want to do more things like looking at the on-chain parameters, showing people how to plot addresses, plot hash rate. So if you're interested in that sort of things, we meet on Friday to do that. So it's a very busy group. You can join everything. It's everything. There is no price. Once you enter in our community, everything is free. All the access to everything is free. And it's up to you. You can participate in everything or relax and don't do anything. But it's a great opportunity if you like to join us. And plus, when you join, you have access to these indicators. There are different levels. You can look it up in the link I gave you. Anyway, so let's go and dive in on these indicators, what they tell us, what we can learn from it. So this indicator is kind of like an adaptive indicator. Instead of calculating the power law in only one place, it calculates it every day. And the good thing about that, first of all, it shows you, right, what happens if you do that, right? So uh, it shows the consistency of doing that calculation, because it's supposed to be a curve, right? And that curve, we see how it bends a little bit. It's a little distorted, and mostly because, even from a pedagogical point of view, it shows you what happens if you do that. Because, when you are close to one of these peaks, of course, the calculation of the slope will be influenced by these very, very large numbers that deviate from the power law. But you can see it's not a huge deviation, in particular as we get more and more data. Because in the beginning, the distortions were big because the bubbles were dominant relatively to the initial data. So it's an interesting thing to do, that you can see that it's pretty consistent. And you can, scroll, go back in time, see how it behaved, etc. The colors here, there are deviations from the trend. This purple line is supposed to be the support line. We basically never cross that line. So it's a very good reference. Maybe I should make it thicker, because it's an important line. The power law itself is the blue line. Now, unfortunately, TradingView, there are ways of doing it, but it's kind of cumbersome and kind of artificial way of doing it. We have another set of indicators where we do have a log version of a chart, but unfortunately, TradingView doesn't have a way of showing the log of time. It's something that is not used often, and so probably they don't do it because of that. And so it's still the power law, right? All the calculations are done as if we're dealing with the power law, because the code, the Pine script code can handle that. You can say, take the log of the time, take the log of the price. And so what you're seeing here is the log linear version, right? So it's just a matter of visualization. It's still the power law. It's supposed to be a straight line if you do it in a log chart. It will be nice, because you see how you can switch between, this takes a log, but only of a y-axis. It would be really cool to have another button where you could take a log of the x-axis, but unfortunately with TradingView you cannot do it. But the calculations, like I say, it's based on the power law, and you see how the power law looks on a linear graph, right? So this, if I unclick this L, it gives me the linear version, right? The linear price, and you see it's a curve. It goes up, right? And all the other deviations also go up. It's a J. It's a kind of a J. It's a kind of like a parabola, right? It's a parabola because similar, because a parabola is square, but this is actually the power of 6. So it's even faster, much faster than a parabola. So when people say price went parabolic, Bitcoin, if you think about the power law as a very good approximation of a general trend, in average, Bitcoin is parabolic all the time. In fact, super parabolic. So I want you to start to think about that. Basically, the power law tell us, no numbers go up. It's going up forever, Laura. It's really true, because until the power law is true, we're going up. This is because the bubble really cancel. The bubble, if you average these, in fact, I can even show you, if you average these price over time, it starts to go like the power law. And the power law is this J that goes to the sky. It never ends. Now, one day maybe starts to taper off a little bit, but hopefully that happens when we are already 100 trillion, and Bitcoin is like $10 million. Who knows, right? But right now, it's this what we are observing, and we are extrapolating it to the future, right? That is what we are doing. Anyway, so if we go back here, so one of the other useful things, sorry if I'm coughing a little, I don't have COVID anymore. I took a test yesterday, but I'm still coughing because of it. So please forgive me for that. Anyway, one of the useful things of doing this adaptive version is that it turns out that it finds all these places where basically the price follows the power law, at least in slope, right? It needs to be, because if a general trend is a power law, it needs to be many places where it does follow power law, right? At least in slope. And so it creates doing it in this way creates all these areas of support and resistance. But it's really cool because you can use it again. First of all, it's nice to see, right? Like, oh, okay, it looks like this year it's like kind of support, and then okay, another support, and then there was a breaking of the support, and so you can use these. You could put alerts on these different lines and say when the price goes below that, if you stay there, give me an alert, and you can do this. You can use this as a buy opportunity, right? It's a nice dip. And you see here, it was more like a resistance. It tried to go across, it didn't. It corrected, support. There are people draw this by hand, and it's very arbitrary. But here it seems like something that Bitcoin really seems to follow. So it's a kind of interesting and useful information. Like the power law itself is right now kind of almost like a ceiling that Bitcoin didn't want to cross because it's not the right time. So it kind of right there, it bounced back and it started to correct. Now, is that a coincidence? I don't know. It seems that it does this over and over again. So it doesn't, our theory tell us that we should not go across this line yet, because that usually happens during the bull market. And so it did. And right now the price is correcting, it's going down. This is the instantaneous value right now. It is kind of cool to look at because you can just look at it and you know what the price is. So what the white line is, this one is this I did draw by hand, kind of extended this line further. Um, anyway, so the white line is what we call the full model. And the full model is this extension to the power law. Basically, this is something that we do often in science. We start with something very simple, and then it's almost like modular, right? You say, okay, I didn't consider some complication, right? When you drop an object, when we teach these to our students, when I was a professor for several years, we always tell them, oh, let's neglect air friction. If you have a huge, big stones and you are dropping it from a small distance, it's, air friction is a small correction. So to make the calculation simple, we say, because friction is very complicated, we say, let's ignore it. Let's just consider gravity. And then you make a model of this dropping object, like if it was, friction. As you go ahead, like if you wanted to do some practical applications, like unfortunately, people started to use physics at a point for artillery, because now they knew how to aim something, and the equations can tell you where the ball, if you know how fast it comes out from the cannon, and you can measure that. You can calculate the angle at which you should aim your cannon to hit that building over there, and you can measure it, using trigonometry, how far it is, etc. And then, people used to do this by hand. They had tables, pre-calculated tables with all the equations, etc. Nowadays, all this is done by computers. The computers aim and then can calculate where the rocket, and you can do it over sometimes even 100 kilometers. So, and so it's all done by computers. And, you need to include air frictions, you need to include the rotation of the Earth, you need to include, if the distance is very large, you do include even the rotation of the Earth. You have to adjust for that. And then you include the wind, all kind of different things. If you're moving parallel to the to the parallels, or if you are doing it along kind of vertical, towards the North Pole or whatever. Um, so you have to look at all these things to aim correctly to your target, because if you don't, then you will miss the target by a lot. So you add all these pieces to make the model a little bit more precise. The problem with when you add all these things, you can also make the model so complex that actually it starts to deviate from reality, right? So it's a trade-off, right? You want to find something as simple as possible. It can contain all the relevant information, but at the same time, you want the simplest possible version of that. And so this is what we try to do here in the white curve, where basically this is the power law, but it's modified where we include the bubbles. And so basically the idea behind this is that the bubbles are very predictable, right? It's an assumption, of course, right? If it doesn't hold in the future, then we will need to reconsider and adapt and make the model better, or abandon it if it doesn't work. But right now, why is doing this? Right now, it seems the bubbles repeat themselves always in a very regular fashion, right? And so what we did, we included that component of the Bitcoin behavior and created this model. Now, we do have a better way of representing the growth during the bubbles. So we know I did these studies using Monte Carlo, where we know now that this growth is more like an exponential up and an exponential down. So eventually we will include that in our models. But it's a simplification. I use basically like a sine wave. The main goal is to kind of tell us more or less where to expect the top according to these cycles. And so we added this in this model. And then it contains also, right, the general trajectory is also there. You see, it follows the power law, this right line, but includes the bubble and includes the bottom, right? That is the other component. We know where to find the bottom. So the white curve basically tries to go back to this bottom. And it also includes the decay, because Bitcoin is so strange. It has all these irregularities that you don't find in other assets. And one of the irregularities that these peaks, in the beginning, they were very large. They were deviations up to maybe 10 times the trend line and things like that, even more. And then they started to become smaller, right, relatively to the trend. But this decay, this change in size, you will think is completely random, right? Okay, it's going down, but if I plot these dots, or that are where the peaks are, and we measure these peaks relative, not in price, but in terms of deviations from the power law. If you do that, you will think we are all over the place. Yes, we are going down, but we are all over the place. You will not expect to see a pattern, and instead there is a pattern that is an exponential. It's a very the way to reveal it as an exponential is to plot it in. You just take the log of a y-axis and you keep the x-axis, that is the time, where these peaks occur relatively to. We measure all the time that we measure is always relatively to when Bitcoin was born. So you do that graph, and you will expect to see these dots that are going down, but they are not aligned or anything. But if you take the log, you can draw a line between them. That means, in that case, that is an exponential, because it's not a log. A line in a log means a power law. A line in a log linear, where you have a x-axis that is linear, time that is linear, it's an exponential. So then you can measure the slope of that exponential, and that the slope of exponential tells you, basically, in a very simple way, imagine all these dots. Turns out even the first one, that it was the first bubble that happened even before the halving, you can even include that one, and even that one follows a straight line. It's crazy, because I don't know how that can happen, because it's mostly FOMO and people craziness, so how come we are very precise too? I don't know. It's something that we need to explore and trying to understand. But the usefulness of that is that you can connect all these dots. In fact, what happens, you could have used the first three, including the first one before the other, the halving, and predict the fourth. We could have predicted this one. In fact, you can do that. You can pretend you don't know this one and use the other three to predict this one. And you do it within tens of thousands of dollars, like $5,000 or something like that. So when people say, and it's this peak, not this one, this was like a spurious peak, like a first peak. Many people think that this was a real peak. No, this was a real peak because it happened at the right time. It follows the power, the exponential decay. And you could have predict this peak within a few $1,000s. It's crazy. So it's really interesting. And so we can do this for the next one, right? We can say, okay, so if we can continue to go down according to this exponential decay, then where is the next peak? And this is where we do here. We project it to the future. So this is basically the future that you're seeing here. Unfortunately, TradingView doesn't allow you to project more than 500 points in the future. It is already great, right? But you can see ahead the road by 500 days. So it's all what we do is always days in these indicators. We're developing some indicators that have a smaller time scales, but almost everything is in days. So we projected in the future this line, because this is an equation. Basically, I'm writing an equation that I can write in a piece of paper. Now, the simplest possible equation for Bitcoin is price equal time to the 6th power, right, or 5.8, whatever. That is crazy that there is an equation for Bitcoin, right? Not many people know that. Oh, look, Bitcoin is so precise that we can write an equation that tells you the price at any given time. But it's an approximation. It gives you this middle ground, right? The fair value, we can call it. But then you can write another equation for the white line. This is how we can extend it to the future, because we can calculate at any value, even future values, right? You give me a future time, I can calculate what is the shape of this curve for the future. And this is what we do here. So once you have an equation, that is the beauty, you can make prediction. Indicators should tell you what is going on right now, but it's great when actually you can extend them and make prediction. Very, very, very few indicators make predictions, because it's a very difficult thing to do. But with Bitcoin and with the tools that we have, you can make predictions. And so right now our prediction is basically during the end of the year, of 2025, we should get this peak, and it should come close to 200,000. So this is how you use this indicator, or this is what this indicator is for. Then we have a simpler version of it. It is this one, that it's a little bit easier to look at. That one has some applications, some usefulness, but this other one, it's simpler. And so basically, and with it's not adaptive, you see now it looks like a much more regular type of curve. This white center line is the power law. Again, notice how it reached there and then it went down, almost like it didn't have the courage to cross it, to say it's no. My interpretation of this, you see how initially we follow the bottom very closely, and then in fact, this is where the bottom was. So this line here is where the support is, this one, this bottom one. And then I think what happened is people got excited about the ETF, and there was also, so what happened also, the ETF came in and bought a lot of Bitcoin, right? Because we had to create the fund, that, there was like an initial very fast injection of funds, and that pushed the price up, and also created excitement. People bought a lot of Bitcoin, and then it was overextended for where we are at this particular point in the evolution of Bitcoin. So right now we are experiencing a correction because of that. It is, it's a good thing. It's a healthy correction. But this indicator is very similar. It has basically everything the other indicator has. It has like a color-coded moving average where you can go here. You see how there is this little bolt. Click the bolt. Right now the average is around 30 days, but let's say I wanted to do a 300. The average, of course, is going to look flatter, right? And so for whatever reason you want to calculate a longer moving average, you can. And here it is. And it's color coded according to where it is in terms of deviations from the trend, right? Of course, it will be red when we are close to the tops, and it will be green when we are close to the bottoms. And I shade these regions where the model is supposed, the price is supposed to be below the power law, and when it is above, right, according to the model. Yeah, so it's kind of cool to use. It's simpler, it's easier to look at, so you can switch between the two. I usually have them in the first panel, both of them, and then I switch between one or the other. And very similar idea. This one also, if you're interested, it has even liquidity levels. Again, you could go to the bolt. Right now, I turn them off, but you can turn them on, and it gives you liquidity levels, where you can see all the different levels of liquidity. The purple ones are, basically shorting, and this one, buying. These are the buying, the long positions, and these are the short position. So anyway, maybe we can have a video about the liquidity level, but it's one of the tools that are available here. Yeah, and there is not much to say. So you can actually average out, these, and you can see that it's going to tend more and more to the support line. If you do, the bubbles are basically canceling. If you do it over a 4 years period, it's going to flatten out, and come closer and closer to the support line. And these are the same thing. The projection here is slightly different because of how these power laws are calculated. Remember, I told you that we do it with one single value here, while the other one is calculated every day. But they give very similar results, so close to 200 basically. All right, so going to the next one, and I know I'm not taking questions. I will take the questions later, all at once. So this one is basically, I don't know if you ever saw this clock that sometimes they show. It's not my original idea, so shout out to the rational root. He came up with this idea. It's not like the power law is not my original idea. I didn't invent power law. My credit goes to about applying it to Bitcoin or discovering that Bitcoin as a power law. And when you do that in whatever field, use something that is already discovered, but then you apply it to a particular field, you still get all the credit in the world. So he didn't invent the idea of plotting it in a circle. We do that with data all the time. When you have, particularly, you do that when you have periodic data, right? Let's say you wanted to measure the temperature of a location over the year, and the year goes to these season cycles, and you want to see if there is maybe an overall change due to climate change or whatever. But you can plot it in a circle, because you will see that the temperature changes as you go around the clock, and that clock will be 1 year, representing the different seasons, how big the temperature. So the length of the hand of a clock will represent basically the radius will represent the temperature. In this case, the radius represents the price for us, and so how do you represent a clock that is supposed to be a clock in something linear, so you can compare it with the chart above? You take the sine wave, because basically anything that goes in around in a circle, it can also be expressed as a sine wave. And you can say, well, Giovanni, a sine wave goes up and down, right? Where is the down? Well, the down, we flip it, because I thought about it. If I represented it like a real sine wave, people would say, oh, but this is the bottom, and it's not the bottom. It's like part of a cycle. And the bottom actually doesn't happen at the bottom of a sine wave. So it will be a little bit confusing. So people are still confused sometimes by this graph, but I don't think it's very complicated. Basically, it's telling us, so first of all, I added something that was not in the original rational root representation of this graph. It is, well, first of all, I made it in a clock where we give times, right? The top is a 12, and 3 is the bottom, 6. This is where people get confused. They think that this is a top. It's not. It's just a very particular time in the cycle where we go. We call it transition from bear to bull, because basically we're leaving the bottom, we are going towards the halving. You can show the halving here, by the way, in this indicator. I kind of suppress it, but if say show labels here, it shows where the halvings are. So we go towards the halving, and towards the more bullish part of the cycle. And so it's almost like springtime, and this will be summer. So this why we mark this particular point. But the orange line here, I should make more the color coding maybe more consistent. But the red line is the general trend here in this representation, this cycle representation. And the orange line is actually the full model. You see how the full model tries to go close to the top, and then we kind of switch when we go to the bottom, right? The bottom is basically where the sine wave will cross 0, but because we flipped it, it looks like a cusp, right? And so it's actually nice because you can identify more easily where the bottom is. It's super Swiss. It kind of got it pretty nice, right? This is where the bottom last time was, 16,000. And then it goes up, right? But now we're going basically towards this other component of the cycle where it's more like springtime. All the color coding, so the color coding above was all about price. This color coding is more about timing. And then, see, you can project this clock, right? Because you can you know the shape of the clock. It's also an equation. So you can project in the future, and it's going to tell you when the next critical time is going to be. And that critical time is this. It's the same thing that we had in the past. And the beauty of this, right, you can actually go and check what the price was doing, right? Let me go back to a smaller moving average. Let's do 30. You can go back to what the price was doing when we had this transaction. You can see that it went crazy, right? Just before that, we crossed the power law. And that is always a good sign that we are in a bullish market, crossing the power law. It has to be done at the right time, because if it's not done at the right time, like here, usually the price corrects, right? So it's a question. That's why we have more than one indicator. We have basically 7 of them, because we want to put all these in a story, right? There is the deviations, but there is also the timing. So if the timing is correct and we are going above the power law and we are close to this transition to full bull market, it's a pretty good sign that the bull market started, right? Maybe we can identify it even a little bit early, but usually it's around this time. And what is that time next? It's going to be at the end of this year. So at the end of this year, this is when we are expecting. So we want to watch out for the price crossing the power law. We want to watch out, coming close to here. So there are a lot of things that together tells you that the bull market started. And so the clock is very useful in terms of timing. The same thing with the other components, like when we come close to the top of it, this clock starts to become red because it's telling you. Now, this where I mark these tops is more like it's not really like the top of itself. It's like the end of a cycle. The top itself happens more like hour 11 rather than 12. So it happens a little bit because this top here is all based on the cycle being exactly 4 years, right? But it can happen that the top is a little bit before or a little. I never see it after 12. It's always a little bit before 12. So kind of like 11, usually, for example, last time was November. But we have all these other tools that help you to narrow down where the top is, the full model, but this gives you kind of a feeling where we are in the season, right? It's kind of seasonal. So this is how I use this second indicator. This one, it's based on the fractal property of Bitcoin. It's called the Earth indicator. You can find it on TradingView, like it's a general indicator that people use, but this is a special modification from this paper that I read, and they took and modified their equations, but it's called Chaos and Order in Bitcoin Market. And they found out, if you read the paper, they are surprised that even if a Bitcoin price seems crazy, there is a order. There is a. They were very close to discover the power law, but they didn't. And what they did, they found power laws, but they found power laws in the fractal properties of Bitcoin. And then they created a model based on these power laws that improves this fractal measure of the price of Bitcoin. And what is the usefulness of this? I need to draw a line at 0.5. I need to make me a note because it's easier to see if you have a reference. But we can maybe make it by hand, right? Kind of like 0.5. Well, look at this. Pretty good, huh? So anything below the line, so 0.5, is what is called going back to the average. Average mean reverting, average returning to the average, whatever expression you want to use. But basically, it shows a type of price behavior where the price deviates. It's almost like an oscillation, and then it wants to go back to the average, and then it goes back. So it's oscillating, and usually notice these times are associated with the bottom. So it's another way of identifying the bottom. It's one more corroborating signal, and if you do any type of trading, this will be useful because that maybe you can use Bollinger Bands or other tools like that show deviations from the trend, and then the price wants to go back to the trend. So it's basically showing something about nature of the price at that particular time and how it's behaving. So if it oscillates a lot, that has to do with how Bitcoin is behaving during these times. Probably wants to stay close to the bottom. That is where maybe the average is. And if it deviates too much, it wants to go back and blah, 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 right? So there is not a precise trend. Basically, this is what it's telling us. Now, if you're really close to 0.5, it's more like noise. It's like undetermined. It's a noisy type of data. But if it goes above and closer it is to 1, more trend following. So if it's actually a pretty good sign that is associated with the bubbles, because basically during the bubble we go in this exponential train that tends to go up, 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 up. And so it's kind of a sign, okay, that is another way. You see, almost like when we cross the the power law, we also went above 0.5, and is another sign, a corroborative sign that we are in one of these bubbles. That we are going for quite a bit, right? In this case, from November to May, so several months of up market. And so this is a very useful tool because probably it's going to continue to go up. It's a trend following kind of behavior. So it's I like this indicator. It's giving us extra information. And then finally, we have this indicator that are basically deviation from the trend. If you go to the bolt, you can see there are different choices. So there are different ways of showing the deviation. So for example, this is called percentage difference. So basically you take the price, you subtract the trend, and then you divide by the trend and multiply by 100. The problem, that is a classical way of calculating deviations. But the problem with that, I mean, it's a problem, it's a feature. It depends what you want to do. If you are interested, just for fun, to know how big the first bubbles were in comparison with the trend, you can see it, they were enormous, 10 times bigger. This is all in percentage, right? They're enormous in comparison with the trend. I wish we had bubbles like that, right? It would be fun. But they see how they decay with time, right? They became smaller and smaller. And we say even this decay is actually an equation, how fast they decay. So it's a kind of fun and interesting, maybe mostly from a pedagogical point of view. But if you want to, know where you are in the cycle, it's not very useful, because how do you know how big is going to be the other one? Well, we told you, but in terms of deviation, so that you would like something that is more regular through all the bubbles. So one thing you can do is to divide by the price instead of divided by the trend. And now you see they became a little bit more regular, right? The problem with this one, they lost a little bit of that sharpness associated with the peak. So we did a kind of a compromise where we have the mean. You actually can take, you divide by the mean between the trend and the price. And now it's a little bit more regular. You see how the peak are a little bit more regular, and they still have a little bit of that sharpness. But these are different attempts. And usually if we find a new oscillator that is cool, we add it to this list, and we improve it. Now, the best one we have right now is this one. This one, what I suggest you to use, because what we did, we corrected that decay because it's an equation, and basically we eliminated. And now you see the beauty of that is all the bubbles are very regular. They're all regular, right? Even the first one. And now because we are regular, we are all the same height, you can create almost like what you can consider a risk, a risk measure. Risk of what? Risk of owning Bitcoin. Because unfortunately, if you are here, I know that Maxi go crazy if I say something like that, but it's a risk in the sense that it's going to crash on you, and whatever your Bitcoin value was here, you're losing it. So it's why, with awareness, with carefulness, I'm sorry that I have to all the time repeat these things, because when people use it against me, but if you make a plan ahead and you say, look, I don't think it's a bad thing for me to sell 10% of my Bitcoin. Or, you can borrow Bitcoin against your Bitcoin and maybe sell the Bitcoin that you borrow. Or maybe you can do other things, maybe if you're doing DCA, you stop buying when we're coming here and you put aside your money and you're waiting. Maybe you don't want to wait all the way to go to green. Maybe you wait until we reach yellow, and you start to buy, and maybe you do the opposite. You start to buy a little bit more and more as we come close. Like, make a plan, right? We are going to help people with maybe spreadsheets, etc., on how to use. There is so much to do, and also in our Discord, people sometimes do things like that, and then they share with the group. We help each other do things like that. But you should make your own version that you like and you trust. Maybe ask help on the Discord. If you have something you want to give to me to analyze and edit and give you feedback, you can always DM me and I will be available. And in particular, if you want to share it with the community, if you think it's a contribution, absolutely for free, just contact me. I'm here to help people in the community, so share it with me. Or make a plan, maybe a spreadsheet, say, okay, what we could use, we see how this is an index. It goes from 0 to 100, right? Maybe you can do it proportionally to this index. You say, as we go through this index, and if I reach this value, I'm going to buy maybe only 80%, and keep 20% aside. Don't spend it, put it in somewhere safe, maybe in USDT. That you can have offline wallet in USDT, and when Bitcoin crashes, because people say, "Oh, this time is different. This time is different." Believe me, I started Bitcoin in 2012, so I went through all the cycles, all of them, and every single time I heard people saying, including me, this time in this different. In 2017, I was under the shower and repeating that as a mantra because my wallet was crazy. I could have made a lot of money if I sold there, even partially. I could have sold half of it and rebuy here. And I was telling myself, I didn't have all these nice, clear indicators, but I had like a primitive versions of this. And I know we were reaching a top, and I didn't listen myself. I didn't listen myself, and I didn't do anything because this time was different, and it was not different. So we never know. We don't know the future. This is why it's all about balancing risk and rewards, right? So you have an enormous reward if you could really, look, the truth is only one. Imagine we had really 100% certainty that the price will crash. It would be stupid not to sell. I mean, every order, it doesn't matter, taxes, not taxes. You pay taxes, okay, you pay 10, 15, because remember, this is a long-term investment. You bought it, supposedly you bought it at the bottom, and it takes 2 years, 3 years, basically 3 years later, you're selling. It's considered a long-term investment. The taxes are now big on something like that. So you have taxes on the possibility of literally doubling your Bitcoin. It will be stupid not to do it. And the only problem is we don't know 100%, right? That is the only problem. But given the regularity of a cycle, given that, I will show you once we look at the liquidity, these bubbles are also associated with a lack of liquidity. So everything screams, we are going down, we are going down, we are going down. So you have a way of doing it, that allow you to make let's say, educated bet, right? A very rational bet. And you say, it's up to you. What is that bet, right? You can go from, like I say, from not buying, because even that is a risk, right? If it continues to go up, not buying is a risk, but it's a very limited risk where you say, look, I don't want to sell Bitcoin, even psychologically, it makes me sick, whatever. But you know what? I'm not buying when it's above 100, or above 90. I'm not going to buy. I'm going to put the money. I'm disciplined, because I hear some people, this Veles guy was saying, oh, you're going to spend it. If you do things like that, you sell your Bitcoin and you don't have it, or even you put aside Bitcoin to buy later, and you don't have the discipline. It's very condescending, very, very, very condescending towards Bitcoin. I think Bitcoiners are adult. They are clever people, the majority of them. We do have trolls, but the majority are clever people. Otherwise, we will not have bought Bitcoin in the first place. You are different from a huge majority of the people. It's almost like an EQ test, or at least, a test over certain very strong, good characteristics of Bitcoiners. And you are special, So I am assuming that you have a discipline to keep that cash until you have a good opportunity, because this is what you're going to use it. You're not going to go and spend it in ice cream. It's stupid. So, come up with a plan, write a plan. Say you have several months. We're going to have a 1 year bull starting in November, more or less, this year. We're going to have 1 year to reach the top. Write down a plan. I'm going to do this. I'm going to sell 10%. I'm going in my DCA. I'm going, when this indicator is above 80, I'm going to stop buying and put aside that money to buy back. Make up a plan, whatever plan you like. It can be gradual DCA, where you have some kind of spreadsheet that, you go down 10% less, whatever you like. And then you start to buy back when, we go down. There are other things you can do. You can look at maybe buying put options against MicroStrategy, for example, or some of a mining company or whatever. There are a lot of things that this information helps you with. It's going to take about 1 year to go from here to there, and you can do something while Bitcoin is going down. Maybe you can make money then. So there is a lot of information, and the entire idea is that we are trying to show you that Bitcoin, it's crazily accurate, crazily predictable, crazily reliable. And we hope that he continues to do that, because if he continues to do that, I'd rather have these than some stupid Omega candle that are these other people that I don't think they are. Okay, even if I say Bitcoiners are clever, in any population, you're still going to have a distribution. And there are, let's say, the less clever among us. I don't know if it is just clever, it's probably some other stuff, that happens in people psychology, that they gambler, I think is almost like a gambling thing, or maybe they have less, they have a shorter, faster preference time. I like this concept of preference time a lot. Being a Bitcoiner should be about long preference time, slow preference time. And they want the Omega candle and all this other bullshit. I rather this, because you can make a plan ahead. If there is a mega candle, first of all, you don't know when it's going to happen, if it is going to happen, and many people will be crushed, because even that, it's not sustainable. It's not going to have some kind of jump all of a sudden. First of all, I don't think it's going to happen. And even if it happens, then the price will crash, because it's just how things work. And many people will get hurt from that, because they are going to buy at the top and the price crashes. It's ridiculous. This is much better, so let's cross our finger that the price continues along a power law, because it's predictable. We can know where we are going. We can use the volatility of a cycle to still make a lot of money. If we take a little bit of risk. I'm not telling you sell everything and rebuy that. The only time when that could be possible, if we had a time machine and we knew 100%. But if I had a time machine, I will go back in time and buy Bitcoin when it was 50 cents. We don't. So we are trying to do our best to understand what Bitcoin is doing, and then we are doing very precise, educated bets, and bets in the trading kind of understanding. It's not going to Monte Carlo here. We are trying to do something rational, right? And say, okay, maybe it's not too bad of an idea to sell 10%, and according to your preference, right? 10%, 5%, whatever. And then I buy back there, If that happens, I have more Bitcoin than I had before. If I didn't, it's not a big deal, because even if the price started to go up and up and up, you still have a ton of Bitcoin. And again, if you see that there is some evidence, because really the price went too crazy and it should crash now, you can still sell there. You can sell a little bit more over there, and you will make even more money, right? So there is not really, we have to be rational with these kind of things, And some people just want to hodl, and let's respect them, there is nothing wrong with that, if that is what you want to do. Nobody's trying to convince you otherwise. I'm trying to this is most for the people on the fence that are thinking about this and they are exploring, than for anybody else. So it's very nice indicator. Right now, this indicator says something like 40, And again, it's all FOMO. We should not have been there, and it's correcting. And so that is actually a good thing that is correcting. I can stop here for a second, and then we can look at the liquidity stuff. I'm going to see if there are questions about this. I see a lot of comments. Let's see. Sorry for that. Yeah, you can ask question or even just have to remember. It's a tough to graph on a lower time frame because the equation calculated right. We can explore eventually things like hours or minutes, but This is mostly about the long trend. So day is kind of almost perfect. In theory, you could change the scale with months and weeks, and actually you can identify even better the peaks in that way. Then you lose that time specificity. So it's always a trade-off. Um, the Y cycle is a function like the power law. Yes, exactly. I can write an equation. It's basically you start with a power law, and then you say add to the power law a sine wave. So I make it oscillate, right? I can modify. It's like imagine you have this trend, and then you have an oscillations around the trend, right? So you can write an equation for that. We know the period. Now, how I was able to find out the peak? You can do it in different ways. There are this function called Fourier that gives you the phase of the oscillation. Basically, the phase is where the peak happens and where the trough happens. Or you can do it kind of by hand, where you add a phase to the sine wave, right? Then you shift it until kind of correspond to your peak. In fact, you know what? I kind of did this here in this indicator. So if you go back to this indicator, I didn't explain you because it has a lot of features. But if you click here in the bottom, this bolt, you see how I can change the phase here. So I can show you. Let's remember this number, 0.578, because I want to go back to that number. But let's say I say 1.2. You see how it shifts that peak. And I did it as an option because if you don't like the place where I play, that is what the Fourier transform says it should be the phase. So it's the theoretical one. But you say, I want to align it with a little bit. I want to shift it a little bit. Then you can do it. But don't. This is more useful, changing where the bands are. You can even change the slope, because let's say you do your own calculation. Say, I think it should be something else. It doesn't really matter. It's not going to change much at all. But if you don't know what you're doing, don't touch this guy. Just touch the moving average. But otherwise, it has even that option, even for pedagogical purposes, right? It's kind of useful. So basically, this is how you do it. You kind of align it with the first bubble, and then all the other bubbles get aligned because it's so periodic, So that's how you do it. Omar, there is a function we produce the Y lines. Yes, exactly. It's a mathematical function that you can project in the future. It's crazy, right? It's crazy that we can reproduce so much of Bitcoin behavior, the bottom, the top, even the bottom. The bottom is, say, when you are a certain distance from, when we are in this region of the period, add this bottom. And so it modifies the power law and it brings it back, right? And then I also add the decay of the bubble. So it's a long equation because it has all these components, but it's an equation. It's crazy that you can write an equation for Bitcoin and it produces, it's that blue curve. It's pretty close, to what Bitcoin is doing. It's crazy. Things like black swan goes. Yeah. So what about black swan events, right? So black swan events, there is actually a cool book from Nassim Taleb, that he's almost like a physicist, more like a financial person, but he took mathematics classes. He's basically almost like a mathematician physicist, and he talks about power laws. He talks, it's just that he doesn't like Bitcoin for some reason. He was a Bitcoiner, and then for some reason he wrote a very bad paper against Bitcoin. That is actually, and one day I'm going to write a counter paper to show that he was wrong. But that is a pretty serious thing. But in general, I like him. He wrote this book, Black Swan. He didn't invent the term. It basically means, like, how swans usually are white, but black swan is a very rare swan, right? It's just a way of saying it's a very rare event. And they can happen. And, what is one of the rarest events, or, rare and also needs to be impactful, right? It's not just a question of rare. It could be a good event or it can be bad. Usually is a bad event, also because of the color. Unfortunately, we associate black with bad for culturally. But COVID was such an event, right? And notice what happened, right? We were kind of almost, we were like really kind of excited. We touched the support, when we went above, when we should not have been above the power law. It corrected, but then it took COVID actually to make the correction really big. And where did we go? We went to the support line, this white line here. And then what happened? The price bounced back. So actually, this is almost like a test to see that the power law works also for black swan events, because yes, there are deviations, like a local news, a local thing, like even the ETFs, they can change the price temporarily, but then it goes back to the trend. That is the entire idea of a power law, that this trend is so powerful, so consistent, so stable, so resilient. That is all things that are actually associated with the power law. This is why power law is such a special trend, that it's amazing that Bitcoin follows a power law, because it has all these very special properties. Not me saying it, just go and read the book Scale, go research it, wait, ask ChatGPT. They're associated with all these things, because basically what power law are about the same type of behavior working at all scales, at all the different scales, and that gives robustness. It's basically like maybe, guys, you made me think about a nice analogy. It's the mathematical expression of decentralization. The general power trend is created because of all different similar behavior happening at all the different scales. And that is kind of like a decentralization. There is no single point of weakness in this thing. You don't have a place where you can attack it and say, okay, here, and the thing will collapse. It's robust because it works at different scales. Okay, so it's one of the greatest properties, and you can see it tends to respond like this, where there are, and we could come up with other examples, but there is a big deviation, so there is a big event, associated. In this case, this was COVID itself. And then what happened? It bounced back, it recovered, and in fact, actually, it's almost like it gave it energy where it wants to go up, and not just up. Actually, this gave a lot of momentum to the following bull market that started just after that. So I use this always as an example of how the black swan come into play. So we don't predict them, but the idea is the power law should be able to handle them, where you will see some dramatic price change, but then somehow the price corrects and it wants to go back to the trend. That is the theory. Now, is it going? We can find out the example. I should make maybe a list of this example and check, when China, the mini China bands, go and check them. Where was it? And you will see there'll be a modification of the price temporarily, but then later it goes back. Right? We know that is true because we see this pattern that Bitcoin went through a lot. And yes, it has ups and downs. Think about the bubble. The bubble, in fact, are another example in a sense. They are very predictable. They happen at certain times, but are also deviation from the power law. And what happened? Well, look what happened. We deviate, right? We go away from the bubble, from the power law to maybe the support. We reach a peak, very far away peak, and we go back with an exponential. Where do we go? 2 years later. How does he know? How the power law knows to go back to the power law, right? And it does this again and again and again. The bubbles basically cancel each other. Right? The component that goes up cancel the component that goes down, and where it goes to the power law. And it's crazy. This is how robust this thing is. So that is the question. Because I had for the people, I don't know if the people that will watch this video later can watch the can see the chat, but there is a question about black swans that I'm trying to address. I set a target sell in 2020. Was within 2 weeks. Okay, great. Let's see if there is any particular questions. A lot of comments. That is nice. All right, seems that is addressing most of the questions. Let's switch to the liquidity indicator. So we have also, I usually plot it as a separate plot because otherwise it will be too much. So I like these guys whole in one single, sorry for that, in one single graph. But because you can compare them and see where we are. They all offer slightly different information that you can put together. But then in a separate, let's say, layout, this out the terminology that TradingView uses, layout. I create a different layout. I call this liquidity, where you see my liquidity indicator. And the liquidity indicator are shown as two things, are shown like an oscillator. Basically, we are taking the difference between the power law and the price, and the power law and the, so basically I'm taking the difference between the purple line, that I'll explain you in a moment what it is, and the price, and I get these oscillators. I added, I don't remember his name, maybe somebody in the audience remember the name, but there is a famous guy that claims he found a very precise oscillation in liquidity, in global liquidity. I need to memorize his name because I'm going to spend a lot of time understanding his model. And I found this book actually. I already knew that I could use all these physics tools that are meant to understand cycles. Like we look at coupling oscillators, like imagine you have two springs, and they oscillate, but then there is like a little spring in between that connects the two. So when one oscillates, influence the other one. This is a typical problem in physics that we call it couple oscillators, because there are many systems. You see, this is what we like in physics. We make these very, very simple toys, like two springs that are attached by another spring. It's called a couple oscillator. And I did actually my dissertation on an application of this approach. I was working with these gravitational detectors, gravitational wave detectors, and we had this detector that had, this was before LIGO, this huge detector that scientists use right now. At that time, this was like a primitive version of LIGO, where basically we had a 1 ton frozen bar of aluminum, and it had a very sensitive sensor that was attached to it, and that sensor was quantum mechanical. We worked with quantum mechanical principles, and it was super sensitive. You had to freeze everything to very low temperature, and the two together formed what is called a couple oscillator. Basically similar to these two springs that I tell you. The reason I'm telling you this is to tell you, because many people come and say, you cannot use physics to describe human behavior or finance. It's so silly. People do that all the time, and it works. And physicists know better than anybody else, because we like these little, we call them toy model, where we use something simple that you can put on your desk, like two springs attached by a small little spring in between. And we study this thing, and we try to understand how it works, because it's simple. We can measure it. It's in front of us. And then with slight modification, because of course it's not one-to-one, you have to understand how it works with more complicated system. For example, my bar, imagine a big bar and some quantum mechanical sensor. It looks very different from these two springs, but in first approximation, they're actually one-to-one. And so by studying the little spring, you can study this more complex thing. And you can go to more complicated things, like, for example, these oscillations that we see in liquidity. I can use the same principle, the same ideas, and study them with the same tools, and it works. And so the people that say you cannot, who are you to tell me you cannot when there are hundreds of scientists more prepared, and not just more prepared, it's not that they are, authority. You have experience, we have a proof of work. Imagine you come with zero proof of work and telling me with years and years of experience working on these things that I am wrong. It's absurd. Nobody will ever do that with basketball players, go to walk in with some professional players and say, hey, I teach you how to play basketball. They will get a whooping, they will get beaten, the security will be called, they will be thrown out, and and they deserve it. But with science, people think that they can do that. It's ridiculous. I tell you, you can use these methods and they work. So I want to use them in the future and write equations for global liquidity and see how, basically like if it were two oscillators, and you can say, okay, is there some connection between them? Is there some coupling? And you can measure how strong this coupling is and what that implies. So you can learn a lot, and we can use it to then maybe make predictions about what is going on with Bitcoin. And it's a very powerful thing, because one thing is the power law that tells you the general trend, so it's all internally based, and another thing is adding all this information about the global market and macroeconomics. It gives us another perspective. So one of the initial things I did, I also draw this red line, and this red line is where I forgot, maybe somebody, Michael Howell, thank you very much. Yeah, Michael Howell. So I added this. It's basically, there is this guy who spent a lot of time. He's not just a random guy. He worked for big banks, and he's very, very well respected. He has a proprietary version of how to measure global liquidity, but then he posts this graph where he kind of approximate the oscillation with a sine wave, and I look at the sine wave, I look where it's stopping, I'm looking at where it's bottoming, and I kind of reproduce it, not perfectly probably, but very closely, because it's all proprietary. So I kind of stole, quote unquote, this curve, because it approximates this. If you look at the graph itself, it's pretty complicated, but it looks like it's can be approximated by this sine wave, and it's a 65 sine wave, right? The cycles, Bitcoin cycles, are 48 months. This one, because it's 4 years, this one is 65 months. So you see, it's exactly like that is physics graph. In fact, exactly what I was studying, because the two oscillators that I was studying when I was a PhD, the little sensor and the bar, they have both what we call them natural frequencies that you can calculate from the size, the material of the object. They were different, and they were coupled together. So you need to understand how they work together. So that it's exactly physics territory. So don't tell me what works and it doesn't work. And I bet it works also for this, where we have two oscillators. One is 65 months and the other one is 48. And we would like to study how they interact with each other. And it can be done. I'm going to spend a lot of time in studying this oscillator. But basically, the owl, and I will remember his name, hopefully I pronounce it correctly, owl, right? The Howell oscillator, we can call it like this, is this guy that says there is this periodicity. And notice what happened. It kind of bottomed at our bottom, last the Bitcoin bottom. This is where Bitcoin bottom was, and this is where Howell oscillator bottom was. And is going up. Because it's an equation, next thing I'm going to project it in the future too, because we can project. Unfortunately, we can only project it 500 days now. Offline, I can show you how it projects it in the future, longer than that. But on TradingView, we can project it for the next 500 days. So I can do that. But I can give you, kind of a spoiler, because I think you want to know the spoiler. is going to peak in September, and the peak of our cycle is going to be in November. So they are going to be very close. It's possible that because of this, I think this is dominant frequency, because all the moving money, etc., all the money that is moved. It's possible then that maybe forces, maybe we have a double top, I don't know, or maybe it forces the top to be closer to September instead of being like November, or maybe a compromise. These how oscillators work. Sometimes you get something in between, maybe October. So we will have to see, but it's a very, very bullish sign that this very powerful global liquidity indicator is going to peak here. Like next time that I'm going to show you this chart, I will have a projection. I will project. I need to do that work. But imagine, okay, where September is. So it's going to peak. We can kind of, I don't know, is there like a free drawing tool, a brush? So it's kind of going to peak August, September, here. Okay, this is where it's going to peak. Yeah. But it's cool, because it's going to be close to where we are expecting the top of the cycle being. We are going to be very close, and so hopefully that gives a lot of momentum to the to the bull. So I hope so. Maybe we go higher than 200,000 because of that, right? Maybe we go 300. Who knows? But okay. So what else we can learn from this chart? So basically, you can read this article. I wrote an entire article because everything I do, I spend hours and hours and hours, and usually do like a study behind it, and then I try to publish the results of a study so people can see the motivation behind it. Even this, I'm drawing all over a chart now. Even this calculation of the peaks, I wrote an entire article about that. How the logic behind. Now, I could be wrong, but at least you can see that I am consistent. This is the article about this model, this global liquidity model. I just posted it in the chat so you can check. Later, I will post it in the comments of a video for the people that are going to watch this later, so you can read the article. I will post also the article about how I calculated the tops, how I come up with these numbers. So, this is my methodology. I'm trying to be, and some of these articles I hope to actually publish eventually, like a real scientific, maybe the top one, not really, but the global liquidity could be a paper, like a real. How do I get out of this? Because I'm drawing all over the place here. Okay. Okay. Yeah, and this could be really a nice scientific article that there is this play between global liquidity and Bitcoin price. But what did I do? If you read the article, I was trying to find if it was a relationship. I have my own measure for global liquidity. If you read the paper, it's explained what I use, but I use a lot of different measures like M1 from different countries, not just US, but China, Japan, Europe, and then different banks. You can read the list. So basically a lot of money all over the world that is moving, and I wanted to see if it was a relationship between the the price and this quantity, and there is, but it's much more complicated. It's not like a simple, nice power law like there is between price and time. So it's not easy to make a model when you have something complicated like that. It's a very non-linear relationship. Basically, Bitcoin is like a liquidity multiplier. It takes little liquidity and it multiplies by a lot. You get a lot from that liquidity, differently from stocks or even gold, where usually the relationship is linear. It's like 1-to-1. Liquidity goes up, the asset goes up, but it doesn't multiply by many factors the liquidity. That is very typical of Bitcoin. Bitcoin multiplies, in particular in the beginning, but in fact, you can see the curve. Like if you look at my paper, the curve goes like this, the curve goes like this, and I have price on the y-axis and this indicator, this index of the liquidity on the x-axis, and it kind of flatten out, not completely, it still goes up, but that means that right now liquidity has a less impact than it had in the beginning, in the sense that in the beginning little liquidity could create a big huge change in the price. I will not say that is a causative relationship. We need to study it a little bit better. I will say that is more like Bitcoin is doing its own thing, but of course to grow its liquidity, and so of course is related to global liquidity. But they are silly, they are disconnected enough, they are uncoupled enough. There is some coupling, but it's what we call in physics weak coupling, where the relationship is there, but it's not really one driving the other. And so you have to be a little bit more sophisticated in understanding. All the people they say, liquidity drives Bitcoin price. It's not correct. It's not true. It's more that they play with each other, and so you need to understand how this relationship goes. And so I try to do my best with something as complicated as that. When you have something complicated like that, there is a tool that is called polynomial expansion. Basically, it's kind of an arbitrary adding of more and more terms. Like power law has only one, x to 5.83, whatever that value is. Imagine I'm adding a linear term, then I'm adding a square term, then a cube one, then x to the 4, x to the 5, x to the 6. If you continue to add, it's called the Taylor expansion in mathematics. You can reproduce, it's a really cool result. It's basically, you can reproduce anything at all. You can reproduce every single oscillation of Bitcoin, and you can say, whoa, you made an incredible model of Bitcoin. You are doing it because you're applying it to the existing data. It doesn't really apply to the future data, but you can replicate any curve. So you want to find a compromise between, say, look, I'm finding the general trend using this polynomial expansion, but I'm not going to add too many terms because otherwise I'm going to model the noise and not really the general relationship between global liquidity and the price. So, where do you stop? At the third power or the fourth power? I stop at the fourth power. It's, I feel a little shame because it's too many terms already. More and more terms you added, more parameters you added to a model, worse the parameter is. So differently from the power law, you should take this purple line with a grain of salt, but it still give us a relationship. So instead of showing the liquidity per se, because if I show you the liquidity per se, then how do you know how it's affecting Bitcoin? You don't know. But this curve is trying to do that. It's trying to tell you how a change in the liquidity is supposed to affect the price. So the bottom line is that we look for patterns. So of this quantity, this basically, I will call it like fair price of Bitcoin based on existing liquidity. Okay, or Bitcoin price based on liquidity. So notice how before the bubbles, we always have these conditions where the purple line is above the white line. The white line is just price, just daily closing prices. And that, to me, the interpretation, so, one thing is observing something and then you need to interpret, right? I mean, what is the interpretation? My interpretation, maybe other people can come up with other interpretation, is that we have more liquidity that we are using. So basically the price of Bitcoin relatively to liquidity is undervalued. And that is good because it means that we have enough room, right? We have enough space to start the bull market. So it's not really associated, the crossing of the purple line and the white line is not really associated with the beginning of the bull market, but it's a precursor. It says we have now the right condition for the bull market to start. Notice what happened when the bubble really goes crazy. Usually the purple line continues and it kind of flatten out a little bit, but the bubble goes crazy and it goes above the purple line. And that is really the definition of a bubble, when you don't have basically anything else than craziness and FOMO to push the price up, and the price is not sustainable because there is no enough liquidity there to support the price. And so then eventually crashes. This is what happens. And then the market overreacts, and so it goes actually below the purple line. That would be kind of a correct price at the time, but it overreacts by making the price even more bearish than it should be, and then everything repeats, right? And you can see that this pattern has been followed over and over again in all the other bull market. There is need this green period before the bull market starts. Now, can we assure that this is going to happen also in the future? No, but it's such a consistent pattern that we think, and it also makes logical sense, right? The patterns is also supported by explanations and logic, right? So the logic will be that we need enough liquidity for the bull market to start. And you can see, I draw these two orange lines. Don't take them seriously. It's mostly like to show. It looks like kind of we are going down in price. We are going up. Notice how the liquidity is going up, right now. And it seems that maybe there is a place where the two meet. It's supposed to be like sometime in October, kind of maybe the end of October. And so if this pattern continues, these two are coming closer and closer, and when they cross, it's a good sign, and then we should start to see green, and that will be a precursor for the bull market, that we are close to the bull market. And also that is cool because also this Howell liquidity indicator is going up, and it's all consistent, so I'm expecting, nobody knows 100% for sure, we could be wrong, but everything seems perfectly aligned for the bull market to start. Some people say the presidential elections. It's a factor. I want to believe Bitcoin doesn't depend on politics. It is, it's one of these things that kind of add to the recipe. It's maybe the cherry on top of a cake, but I think these other more fundamental things are more important. So let's see, and the beauty of these indicators is that they give us a path, and they give us a guidance, and we can see, is it coherent, how everything aligns, etc. I have one more indicator that is this volatility indicator. It's also very cool. Okay. I wanted to show the price. I don't know why the price is not showing up. I don't know. It's supposed to compare it to the price, and right now I don't know where the price went, but give me a sec, maybe I find it. Okay, it should be here. Yeah. Okay, let's click on A. Okay, so you can compare it with the price. This is the price with price bars. We could add some of the other indicator, but let me just tell you about this indicator very quickly. So what this indicator does, it calculates the volatility, or basically you can call them also return. So the return by definition is the price today over the price yesterday, right? So if it is above 1, it is a good day, Bitcoin went up. If it is below 1, Bitcoin went down. I know that you don't want to think in terms of returns, but like if we're trading, but it's basically that, right? If you have a bunch of positive returns and you compound, what in this case, the beauty of having express the returns as ratios, that you can multiply them. So if you have one entire year of these ratios, you can multiply them. It's called cumulative product. So the cumulative product, if you multiply all of them, gives you this curve. If I multiply all my little returns, I get this curve. In fact, you can get the entire curve of Bitcoin, right? You take all the little returns, you multiply one by one, and you keep track, right? And you get the entire history. Now it turns out that the power law, you can write an equation for how the returns look like. The returns, the equation is very simple. I can even write it in the comments. The returns, it's a really cool little formula. I'm going to show it in the comments. Okay, return equal. You can do whatever you want. You can use day. Let's use day, but you can use year if you want. You can substitute weeks or years. You take whatever day. These days need to be expressed in terms of days from January 3, 2009, because January 3, 2009, when Bitcoin was born. But it was called the Genesis block. But you can always ask, many times I go to Google and say, how many days from today or whatever date from January 3, 2009? And it gives me the dates. In fact, we can do it right now if you like. Say days. I even written, right? It says 5,721. Okay. Or you can ask a ChatGPT or whatever. So going back to the video, and so I'm writing it in the comment. So it's a day plus 1 over day, and then you take the power of the power law. They use this slope. I'm using 5.82. You see, there's a little equation here. And you can calculate. So right now it's 5,721. So let's calculate that. You can use, you can do it with me if you like. You can use a scientific calculator because you need to take that power. So right now it's 5,721. I'm adding 1 to that, and then I'm dividing by 721. And then I take the power of 5.82. And what do I get? I get 1.001. Okay. So that is, I can show you, that is the return 1.001. So what does it mean? It means that every day, according to the power law, we should do in average 0.1% per day. You can use that formula, so write it down somewhere, mark it somewhere, because if you are very curious and you want to calculate using years, so right now, for example, we are about 15 years, right? We are coming close to almost 16 years, but you could substitute now the years from when Bitcoin was born. So it will be 15 plus 1 divided 15 and then 5.82. And that one gives me 1.45. So basically it's telling us that we are making about 45% a year. That is a pretty cool formula, right? So it tells us 1.45. The way to read it is 1, right? Because these are returns. You're making more than 1. And then 0.45 means 45%, like this. Okay? If we were making 2 times, it would be 2, right? 2, and so on. It's really cool, right? This is the returns per years, 45%. And so what this indicator does, the blue line that you see here is that equation that I just showed you, calculated for day. If you switch these to minutes, if you switch it to, I think, I need to double check, but it should be interactive, where if you change the time frame, it should recalculate it for that. I don't want to switch it, right now, but I'm going to double check because I want to make it interactive, where it should work for any time frame. So if we go to years, it should show years, whatever, and you can play with it. Let's try. It doesn't. It's not that something explodes and in our face. Okay, so if we do it, no, something exploded. It doesn't. But where did it go? Okay, so maybe it doesn't work. I will make sure. I need to go back and make sure it's actually working for longer time frames. Let's see what happens if we do a month now. Okay, let me, I don't want to waste time, and I will double check. So sorry, maybe there is something in the code. But we can make it work for any time at all. It's because then it's really cool. You can look at what happened, what the average returns are over a month, over a year, whatever. But right now it's over day. So the blue line, and you see if you scroll, see how the white line. What is the white line? The white line is the average returns daily returns over a certain period of time that you can choose because it's in the board. You see how you don't see very well because it needs some time to calculate. But you see how here was more bent, because the averages, it was really brutal in the first couple of years. We were making like huge returns, and then we went down very, very quickly. You see how the blue line really tells you like the general trend, of the returns. So yeah, they oscillate because there are bubbles, there are all kind of things, but in average, they oscillate around the blue line. And this is another way of showing the power law is really true. It's not a fitting line anymore. It's a very statistical, beautiful property of Bitcoin. That is a lot of the critics don't know this kind of stuff. That actually it follows the return. Returns is more. Many people use returns to actually eliminate patterns. Because you're taking the change of a pattern. So if it was a pattern, in theory you should eliminate it in that way. But this pattern is so strong over time that actually the returns follow the pattern, and you can see in average, right? And I can take a longer averaging period, and you will see that they come closer to the blue line. So these are the return. What this graph is missing, it's a line at 1, so you can see above 1 returns and below 1, right? If you're below 1, we are losing. If you're above 1, we win. I need to add. It's a work in progress. I'm trying to update these indicators all the time. Plus, we're making new indicators. I'm going to make an indicator about a MicroStrategy soon. And by the way, we never charge you if you are in the highest level package, that is only $20. We never charge you more for the new indicator. It's a deal that we made with the Discord member that we are going to keep it at very reasonable price. Even if I add 10 new indicators, it will always be like that. Anyway, so this is the gray ones are instantaneous returns. So basically, daily returns it's a mess, right? Sometimes we win, sometimes we lose. And, in general, we win, right? Because 1 is always way here, right? So we are mostly above than below. Maybe during the bear market, we mostly go down. With one line, it's really important to have. And then you have a white line that you can control how big the averaging is by the usual thing, right? You click on the bolt, and then right now it's over 2 months, but we can make it 200 days or whatever, and then it's going to be a little bit smoother curve, right? And you can play with it. But what is the usefulness of it? First of all, you want to see if we are above a power law, right? Are we below? Are we above? And you can see, right? For example, during bear markets, we are below the trend. This is the general trend. It's not the support line. This blue line is the general trend, not the support line. So if we are here, you can see it's during a period where we are at the bottom. During this. If we are above, like here, we are during. It's another way of identifying this period associated with the bubble, so associated with when we are close to the bottom. So it's very nice in this. It can also help you on a shortened time scale because, see, these red and green lines are like one standard deviation. If one of these peaks crosses, probably is a good place where to buy because there is a dip. You see how this is associated with this dip here. And same thing, if it goes above, probably is a place where I don't know, we are overpriced, etc. The price is too high. But what I did here, I added the orange one is drawn by hand. I need to add it, by calculation. But I draw two lines. One is this green line, and the other one is the purple line. What these two lines represent? The green line represents what we need to do during the bull market to reach 200,000. So basically, you can calculate, because it's an exponential and we know where it is. Right now, remember, we make about 0.1% a day due to the power law alone. In average, we need to go to 1.003, so 0.3%. So 3 times during the bubble, we need to make 3 times more money than the power law says we are making. So this is why another reason why you want to think about selling a little bit, because you are going to have 1 year where we make 3 times more money than the usual returns from the power law. So you want to lock, it's a way of locking these returns by selling a little bit at the top. And so this is the place from here to here that is the next, because it's going to be from the end of this year to the end of the next year. So it's all this range. So during this range, we want to see the white line going above that green line, because if it is above or kind of hovering, that is 1.03% a day, 0.3% a day, or if you express it as ratio, it will be 1.003. If you express it as percentage, is 0.3%. And so you need to be, sometimes it can go above, sometimes it can go below, but in average, you want to see that white line hovering, like, see how here is hovering above. It needs to be hovering above or close to the green line. If we don't do that, that will be a good way of monitoring the price as we climb there, during this year. Because if we don't, it's alarming. We will never reach unless we did something crazy. But my previous study show that we do it in a very consistent manner. Sometimes there are some drops, sometimes we go a little bit faster, but in general, we follow this average exponential pattern. And so that white line needs to be pretty consistent above that green line. If it is not, then we will know that something is going wrong, that maybe we're not going to reach 200,000. Or if it is above, then we know that probably we are going up. So it's a very good way of monitoring what is going on moment by moment. I draw this purple line because if we are above that purple line, some crazy people like Plan B says we are going to reach 500,000. So I put it there for fun. We will need the Y line to be consistently over this entire period. Imagine, right? Can you imagine going there and stay there all the way there for 1 year? If that happens, we go to 500,000. And I draw the orange line. I didn't draw it initially, but I did it by hand later. That is 1 million. If we go above that line, then we reach 1 million within this cycle. That I think is pretty unlikely. You can look at how this graph looks like. Well, we kind of reach there during 2000. This actually is the last bubble. For a little bit, we were above it during the peak above. So it can look like this, where for a little while we go above because it's really accelerating, it's picking up pace, but then we go down. So it's a way of monitoring from another angle. More is like the price is more like the velocity, the position of an object. Imagine we are tracking an airplane, a rocket. The price gives us the position. This gives us the velocity. So it's a pretty cool other way. So this kind of covers all the indicator. I know it took forever, but I think it's a comprehensive discussion, I think. So I'm going to stay another couple of minutes, 5 minutes. We are already almost 2 hours. But if there is any other question, I'm available for questions. If you have any questions or anything at all, it doesn't have to be about the indicator. It can be about recycles. It can be about liquidity, anything at all. Yeah, the episode with Robert was amazing, right? It was really good. I like the format. First of all, it's so much better to talk in person with somebody than doing it over Zoom or whatever. And second, I knew already about his style, that he's more like a philosopher kind of thing, and so we discussed things from a different angle, more like a philosophical discussion. And he's very, very prepared because I posted in my X. He had 4 different episodes with Jeffrey West, with the author of that book that I recommend all the time. And by the way, if you are interested, I can put it in the chat. Probably you're already, I mention this book all the time, so probably you're already aware of this, but maybe there are some people. So, and for the listening too, we have there is this amazing author. He's also a physicist. He wrote. He went from studying particles to study animals. When he went to study cities and society, so he applied physics to society, and he discovered all these power laws. And he wrote an entire book about these power laws, about this, and he calls it. He doesn't call it power laws. He calls it scale, because scale is the most important property about power laws. And in general, the topic of scaling, etc. But power law and scale are very much associated. So Robert Breedlove had 4 different episodes that I really suggest everybody, because they try to make the connection. At that time, they didn't know that Bitcoin was a power law, because I already worked on that, but nobody knew almost. Was not very well known. So it was kind of amazing to be interviewed by him, because he had already a lot of knowledge about the topic, so he could ask very good questions. So it was very productive. So if you guys don't know about that episode, just Google, Robert Breedlove, and he's very good. Has very amazing interviews about with many different interesting people. Is it possible to see if any look, there is only one other coin, and I almost never mention it, because there is so much hate in the community for other coins, and I tried all the other ones, and they don't follow power laws, or they is a very, very bad fit. And of course, all the other assets, gold, Nasdaq, stocks, they do not follow power laws. One of the things that you need to understand, power laws are all about this scale thing. So you do want to have at least one of the parameters that you are describing, in this case, price, to cover many orders of magnitude. And with the price of Bitcoin, we go from a fraction of a dollar all the way almost to 100,000. So we're talking about a change of almost 1 million. So that is 6 order of magnitudes. There are very few coins that, or even assets, that have done that. So when you're talking about power law, it's almost nonsense unless the asset has covered many order of magnitude. This is why it doesn't even make sense to talk about Nasdaq or gold, because at most, how much did they change? Maybe a factor of 100, that is 2 order of magnitude, but you will have to look at 50 years of history, and still they don't follow power laws. If you look at they follow exponential. They follow exponentials because they are linked to inflation, and inflation is exponential. Basically, they are kind of driving the inflation. This is why they go up. Like many people say, it's not your house that is going up. It's the value of money that is going down. This is what you're seeing in most assets. You're seeing them going up because the value of money goes down. With Bitcoin, it's not like that, because Bitcoin grows so fast that the change due to inflation, it's like a correction. It's a small correction. It's like when you drop a huge big stone, gravity dominates over friction, over air drag. It's a small correction. Unless you go to a very big height, or whatever. So yeah, there is one coin called Caspa. Some person with is like an influencer, like he has his own group of followers. He asked me to look at this coin, and I was going to show him. See, this is another failure because he gave me like a list of 4 or 5 coins he wanted to look at, and all of them were not power laws. And then I write to Caspa, and it kind of looked like a power law, with all these caveats, that it doesn't cover a lot of order of magnitude, that it's too early to tell. But being a scientist is something. It's something. I'm not going to cheat, because I have an agenda and tell him, oh no, it doesn't. It will not be right to do it scientifically. Some people, there is this guy James Van Staten. He made a list of concerns about the power law, and he used these against, like, oh, if it is a shit coin that follows the power law, then that takes away somehow from Bitcoin following the power law. No, actually, if anything, it supports it because, first of all, it's a proof of work coin. It's one of the coins. It comes as close as possible. Supposedly, I need to research it a little bit better, but it's one of the coins that comes as close as possible, from what I understand, to the protocol of Bitcoin. It's an improvement, supposedly, in some aspects of a chain on Bitcoin, and you will expect a coin like that maybe to follow somehow how Bitcoin works. And it has also a very fanatical group of people that creates kind of a kind of almost like the fanaticism, with good fanaticism, right? Passion, let's call it passion, the passion of the Bitcoiners. And so it has a lot of similar characteristics. The only thing that it doesn't have, it's 8 orders of magnitude, 6, if you include, since we started to trade Bitcoin, 8 if you include even the first transactions that actually they follow on the power law, like the first Bitcoin USD transaction, it was $1 for 5,000 Bitcoin. It's 8 order of magnitude. No, there is nothing like that, So until we really tested Caspa, we cannot know for sure that it's a power law. It kind of, like I will say, kind of look like a power law. If you do all the tests that we do, like R square, etc., it's a very good R square. It seems to follow a power law, but also the slope is smaller. Bitcoin is close to 6. Caspa is 4. That is another way of saying Bitcoin is superior. This is not as good as Bitcoin. It doesn't go fast as Bitcoin. So we will have to see. And it's not. And the other thing, like somebody showed me, I didn't do hash rate, but guys, that we have 6 big power laws, right? We have hash rate, we have addresses, and we have price versus addresses. All these are power laws. There is not just one power law. There are 6 of them. Go and read my original article if you didn't yet, where I describe all this. I wrote a Medium article where I describe all this stuff. I can post it in the links. Yeah, I will post it in the video when I do the video, when I finish the video. But yeah. If somebody show me the hash rate for Caspa, and the relationship between price and hash rate in Bitcoin is hash rate equal price square. Guess what? That is the same thing with Caspa, that has a very similar hash rate type of protocol and so on, difficulty adjustment. It's almost like identical, and it produces the same power law that we see in Bitcoin. So I will almost use it as confirmation, as a corroborant argument that we are indeed on a power law with Bitcoin. And then there is like a copy of Bitcoin that kind of looks like a power law, like we will have to see. So yeah, so far as far as I know, that is the only one. Just to answer the question. Okay, guys, we we did 2 hours. I was planning 1 hour. It's never going to work out because I talk and talk, but hopefully you learned something. Maybe it was useful to go through all this stuff. uh, I will try to see if I can put some timestamps, but thank you to be here and share this with me. See you soon. We will try to do this at least once a week. Thank you, guys.